Hi, I'm Jen Gumbel from Wagner Oehler, and I'm here today with Judith Wilson, who is an attorney that's new to our firm, but not new to Rochester. Judy, how long have you been in Rochester?
I've been in Rochester for almost 20 years now.
Awesome. And working with clients that whole time?
Yes.
All right.
Yep. In the areas of estate planning and trust and administration the whole time.
Awesome. And you work a lot with the Minnesota estate tax. Is that fair to say?
Yes, I do, unfortunately.
And Minnesota is kind of known to be bad for taxes. Why is that?
Well, there's not many states that even have an estate tax anymore, and we are surrounded by states that do not have an estate tax. So it's really been incentive for people to actually move out of the state of Minnesota because of our estate tax.
And what does our estate tax look like? When do people have to start worrying about it?
So if a couple or an individual has over 3 million, we have to be thinking about doing some planning to minimize estate tax. Kind of the unfortunate part about Minnesota estate tax is that if you don't have a plan in place, then a couple really only have an exemption instead of two.
So basically, I'll walk through how this works, and if one spouse dies and there's no planning, the surviving spouse gets it usually, and they get that tax-free, but then the spouse has everything and they only have their one exemption. That's how it works, right?
Right. It's really, to me, it's doesn't seem very fair. So the federal system allows a couple to really double the exemption really without any planning. The feds say, hey, if you didn't use the exemption on the first spouse's death, you're going to be able to use it on the second. Well, Minnesota says if you didn't use it on the first spouse's death, then you lose it. And so I feel like it's not very fair to people that you are entitled to an exemption. Each of you is entitled to a $3 million exemption. So we, put a plan in place that allows us to use the exemption on the first spouse's death. And I would say, it's not like we're doing anything, there's like a loophole or we're trying to,
Right.
It's, you are using something to which you are entitled. But we need a plan in place so that the first spouse, we have that available to them. So then what we do is we say for every couple, you have a $6 million exemption instead of just the $3.
Once you get that plan in place. And the estate tax isn't just what's taxed on what's stuck in probate. It brings in everything. So that's life insurance, and that's assets in a trust, and that's assets that you own normally in your name. It's everything, right?
Yes, and people, of course, don't really think of life insurance as kind of being part of their net worth because, it's payable at death. So they're not really thinking that that is an asset at death that is subject to estate tax, potentially. The other thing that people aren't thinking about is retirement accounts. So at death, they're subject to income tax and estate tax. So that can be kind of a shocker to people because they're not maybe thinking of their retirement accounts. I'm talking about, 401ks, 403bs. They're thinking, oh, that's, what I'm going to be using in retirement. But of course, at death, it's be sitting there as a lump sum, and that will be subject to potential estate tax and, of course, income tax. Yeah,
a lot of people, I think, have the perception that planning for estate taxes is only something wealthy people do. And in Minnesota, there are lots of normal people who have an estate tax problem.
Exactly right. I mean, we were at 1 million for a long time, 1 million exemption. And so obviously way more people fell into that. So, I mean, I'm happy the exemption has moved up to 3 million, but still, it's not that difficult to get there if you have, life insurance, like your employer paid life insurance. Sometimes people aren't even thinking of that. Here in Rochester, we have an employer who might cover 3 times salary, and that could be, almost $1 million for some people that they're not thinking of as an asset that is subject to estate tax at their death.
Yep. So if people want to get started on estate planning, it's really easy for them to get our help. They just have to, again, this is for people in Minnesota or people. This actually affects the Minnesota estate tax if you don't live in Minnesota, but you have real estate in Minnesota or assets in Minnesota, you'll get caught up in this too.
The other thing that I'd like to appreciate is that they think that if they are a Minnesota resident and they have assets in another state, like they have Iowa farmland or they have their Wisconsin cabin, somehow that's exempt. And what we do in Minnesota is we say, what's your total estate? What's the Minnesota, is the numerator of the total estate as the denominator. And then we're going to be using that ratio against the estate tax that would be assessed here. So it's not exempt. It does affect it. It does decrease the amount, but it's not exempt.
It's such a sneaky thing because Minnesota can't tax something in another state, but they say, okay, but we can change our exemption. And they reduce the exemption based on how much, by a fraction of what's in Minnesota versus outside of Minnesota. So they'll, so we calculate it in there.
Exactly.
Yep. So if you want to get started to meet with Judy or any of our other attorneys here in the office to start to think through how to minimize those Minnesota state taxes, just give us a call. We'll schedule you for an appointment, either in person or Zoom or over the phone, and get you squared away to minimize the taxes that your estate will have to deal with. Thanks, Judy.
Great, thank you.